Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Brandt, Director of Research at EPFR, to discuss why current fund flows reflect a fragile but bullish consensus for global growth. Cameron, it's great to have you with us. Welcome to Trade Talks.
Pleasure to be here. You
got it. And give us a high-level overview of what you're seeing in terms of fund flows. What suggests this cautious but bullish consensus?
Pickup of flows into U.S. equity funds, starting to see money come back into commodity sector funds after long absence, persistent flows into technology sector funds, really regardless of what the Fed has done on interest rates. And those are sort of the major ones that I've been watching recently. Fixed income universe moving to a slightly different beat, which is that the fact that there's some yield on offer has people piling into these funds, again, pretty much regardless of what's happening on interest rates.
And liquidity funds have by far seen the biggest inflows this year. What does that suggest to you?
Well, it suggests that people have finally noticed that sort of keeping your money at 0.01%, 1 basis point in a CD or a bank checking account, it really is costing you money. This movement has been significant. Those regional bank failures that we saw earlier in the year, cost of funding was definitely part of that equation. And part of the reason their funding costs went up is that their customer base started to migrate to these liquidity funds.
And emerging market funds have attracted significant inflows relative to the outflows that you're seeing in developed market equity funds. What areas of EM are performing well, and why do you think that is?
Well, up until a few weeks ago, it really was an emerging Asia show. And within that, it was China, firstly, hopes of the post-COVID lockdown rebound. And when that didn't quite materialize, India, funds dedicated to India began to pick up the slack, and people are nothing if not serially optimistic about China. So now the driver is the expectation that the government there will have to deploy more aggressive stimulus in the second half of the year. In the past couple of weeks, though, we started to see much stronger flows into fund groups dedicated to Latin America. They're beginning to benefit from being the early runners in terms of trying to contain inflation by raising interest rates. So they are at or past the peak of their cycle, and Chile actually came through with a fairly aggressive cut towards the end of last week. They're also benefiting from renewed interest in especially industrial metals, not so much because people are expecting conventional demand, but there's been a lot of focus recently on what it will take to sort of lay down the infrastructure for a clean energy grid. And while most of the talk tends to focus on lithium and rare earths and cobalt, in fact, what you really need is an awful lot of zinc, copper, nickel, so that people have begun to reevaluate where the demand will come from and how strong it will be on many bread and butter commodities.
Well, Cameron, you know, it's so interesting. To your point, there's a lot of investment opportunity in clean energy infrastructure, EV infrastructure, another big one, particularly with the mandates that we have here in the US. But what's interesting is socially responsible investing in ESG equity funds have been really choppy relative to the inflows that we're seeing in other areas. Meanwhile, the big investment theme is clean tech.
Right. In a way, it's not so surprising. So much money came into the funds with ESG SRI mandates that there was always, I think, going to be a little bit of a reckoning. And it's frankly, while it's definitely, I think, a theme that's here to stay, it's a slightly awkward fit. The funds are judged quarter to quarter. The environmental and social goals they pursue may take a decade to realize. So, there's definitely going to be some adjustment in terms of expectations and what the funds can deliver. You're also right that people have turned to tech funds as sort of the the way to access ESG themes and also hopefully get exposure to the much pursued AI machine learning theme that has certainly dominated this year. Interestingly, what we've been seeing there recently is a real focus on funds dedicated to anime, visualization, and gaming. So I think when people actually think, how is AI going to turn the first profits, they're sort of looking to people using it for home use, home entertainment, gaming uses, even though the talk is all about how it's going to revolutionize, business productivity.
All right, Cameron, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Pleasure to talk to you.